Hi there, this is CMA Nishant Sagunath welcoming you to a new video under my study for income tax. In this lecture, we'll be learning about a very unique and interesting concept. And let me get your attention to what I'm going to say next. This particular area of study has had lot of amendments as per the Finance Act of 2020. The Ministry of Finance had brought in a lot of changes, a lot of amendments to this particular area of study, and I want you guys to pay extra close attention to the parts of amendments, because there are high chances that you will be questioned in your examinations with respect to those amendments. All right. So yes, the topic for our study is residential status, scope of income, and incidence of tax. And this video will be the first part of our study for this topic. And in this video, I'll be explaining to you a lot of basics and fundamentals that you need to know with respect to the rules that makes an income taxable in India. That is, an income becomes taxable in India on the basis of two rules. One rule is based on the SSE, and that rule is called the residential status rule. And the other rule is based on the income, not the SSE, on the income, and that rule is called the source rule. So I'll be giving you all the basics regarding both these rules in this video, and after that we'll be going to the determination of residential status of individuals. See, we have this process of determining residential status for all our SSEs, for firms, for companies, for LLPs, for AOPs, BOIs, etc., etc. But then individuals' residential status determination is the most important one, and I'll be covering just that area for this video. The rest of the SSEs we'll see in the other video. Alright, fine. And again, the source rule also will form part of other videos as well. Right. So, for an income to be taxable in India, for taxing an income in India, we have two rules as per the Income Tax Act. As I said previously, one rule is with respect to the incomes, and that rule is called the source rule. This is purely in respect of the incomes. And the other rule, which is in respect of the SSEs, is called the residence rule. This is purely based on the SSEs. Alright. So what the source rule tells is that an income shall be taxable based on the place of accrual or received, based on the place of accrual or receipt of the income. What the residence rule tells us is that an income will be taxable in India based on the residential status of the SSE. Alright, it's based on the residential status of the SSE. Here, it's based on the place of accrual or receipt of income. I'm assuming you know the meaning of accrual and receipt. If not, I'll be explaining it to you in our study for source rule. And here under residence rule, it says an income will be taxable based on the residential status of the SSE. So if you check the Income Tax Act, you will see that the source rule comes before residence rule. But in our study, I'll be explaining residence rule first, because that makes the process of learning far more simple. That is to learn residence rule first and then go into source rule. Alright. So we'll be learning about the determination of residential status of all the SSEs starting from individuals. And I told you individuals is the most important one here. And I'll be covering individuals' residential status determination right here in this video. Yeah, fine. So yes, before going into the residential status rule, as I said, let me give you a quick summary of both the rules first. Alright. As per the source rule of the Income Tax Act, what we are told is an income can be classified into four categories. Category number 1, income received in India. Category number 2, income deemed to be received in India. Category number 3, income accruing or arising in India. Category number 4, income deemed to accrue or arise in India. So these four classifications tells us about the scope of income. Alright, scope of income. The source rule tells us about the scope of income. Whereas the residence rule tells us that an SSE can be classified as a resident and a non-resident. So an SSE can be classified as a resident or a non-resident, and this resident can be classified further in case of an individual or a chief into a resident, ordinarily resident, ROR in short, or resident but not ordinarily resident, that is RNOR in short. Understood? And this whole rule tells us about the residential status. And these two rules together tells us about incidence of tax. That is how and when tax becomes applicable to a particular income. Right? So two rules, source rule and residence rule. Source rule classifies income into four categories, whereas residence rule classifies an assessee into two categories, that is resident and non-resident, and individuals and HUF. Individuals and HUF are further classified into ROR and RNOR. Fine. Now let's check the process of determination of residential status. That is, there is a certain criteria on the basis of which how we determine the residential status of each assessee. So for individuals and for HUFs in part, we determine residential status based on the number of days they stay in India. So simply based on the number of days an assessee stays in India, we find the residential status of individuals and HUFs in part. The reason why I'm mentioning in part here, you will understand that once we head to the study of understanding the residential status of an HUF. Alright. For all the other assessees like firms, AOP, BOI, company, etc., the residential status is determined based on a particular place. That is a place of control and management. Or for companies, it's called as the place of effective management, POEM in short. Alright, it's nothing but the place from where a company or the assessee is managed as a whole single unit. So it's based on that place we determine the residential status of all the other assessees. For individuals and HUFs in part, it's simply based on the number of days the individual or the Karta of the HUF stays. Don't get confused of what I just said about the Karta and HUF. You will understand that far more better and with much better clarity when we head to that particular chapter. Alright. Also, one more thing that you need to know. This whole process of residential status determination should be done yearly, because an assessee can be a resident in one particular year, can be a non-resident in another year. The residential status can keep on changing. Alright, hence we need to determine residential status of all the assessees on a yearly basis. Fine? Right. Now, as per the residence rule, I told you that we have a classification, a basic classification of resident and non-resident. This is the first level of classification and the only level of classification for certain assessees. For individuals and HUF, we have another set of classification as well. But for all the other assessees other than individual HUF, this is the only set of classification, the only level of classification. Also, as per the Finance Act 2020, a new insertion was brought in and a new category called deemed resident was inserted. Alright, this falls under section 6, 1A. We have a separate study for this part. Okay. So yeah, as per residence rule, we can classify an assessee as a resident or non-resident. It ends here for all assessees other than individuals and HUF. For individuals and HUF, we can classify a resident assessee further into a resident and ordinary resident, that is ROR, or into resident but not ordinarily resident, that is RNOR. In certain materials, you will just find it to be mentioned as OR or NOR. But I call it as ROR and RNOR. Alright. But then it's the same in other materials mentioned as OR or NOR. Fine. Understood? Alright. Now let's see how we can find out the residential status of an individual. So for an individual, we have the basic classification of resident and non-resident, and this is done on the basis of two basic conditions. And the resident is further classified into a resident and ordinary resident or resident but not ordinary resident based on two additional conditions. So it's a set of conditions which determines whether an assessee, an individual, is a resident or not, and further whether a resident individual is an ROR or an RNOR. So both the levels of classification, you have two conditions each. Just that they are completely different, drastically different, and applied in a different manner. And what do these conditions rely on, or what are the criteria on which these conditions work on? It's all on number of days an individual stays in our country. So these conditions of both basic and additional in nature are based on the number of days an assessee stays in our country. So shall we head into the detailed study of both these conditions? And also I want you to know one more thing. With respect to the residential status of individual, the Finance Act of 2020 has brought in some major amendments. One I had already mentioned, that is deemed resident, and the most important one is with respect to persons of Indian origin, PIO in short, or Indian citizens who reside outside, that is reside in any other country but decides to visit India. Do not have to take down what I'm writing here, just keep this in mind. We have the amendments from the Finance Act 2020 for 1, the deemed resident, and 2, for persons of Indian origin or Indian citizens who reside outside India but visits India. I have a completely detailed explanation for them both in this video. Right. So let's check both these classifications out and the amendments as per the Finance Act in detail now. So before going into the detailed study, there are certain points that you need to keep in mind. See, I told you the deciding criteria is the total number of days an assessee or an individual stays, right? Deciding criteria is total number of days an assessee stays. So when you total the number of days, you need to keep all these points in mind. And the points are as follows. Stay at same place in India is not necessary. Say we are taking the case of an assessee and we are totaling the number of days the assessee has stayed in India. So when we check, we see that the assessee has stayed in Maharashtra for a certain number of days, in Madhya Pradesh for a certain number of days, in Karnataka for some number of days, in Kerala, Tamil Nadu, Punjab and various other places for a certain number of days throughout the previous year. No problem. Just total all the days he stayed throughout all the places. Fine? Simple. Next, continuous stay in India is not necessary. Say this assessee of ours comes to India, stays in Maharashtra for 30 days, leaves to the US for 15 days, comes back to Chennai, stays there for say around 20 to 25 days, goes to Singapore, comes back and stays at Goa for around 100-150 days, goes to the UK, comes back, stays at Kerala for another 15 to 20 days. Okay, so he keeps on moving, coming back, moving, coming back, moving, coming back. No problem. This continuity of stay is not necessary. You can break your stay. Just total all the stays. You take all the stays individually, add them up. That's it. Next, very important point. See, I'm just going to be drawing India, alright. Just consider this as South India, alright. So here we have Kerala, here we have Tamil Nadu, we have Karnataka, we have Andhra Pradesh and everything. Okay, fine. Sorry, pardon my drawing skills. See, when we talk about being in India, staying in India, we just not refer to the land mass. We also refer to a particular concept called the territorial waters. Territorial waters. And by territorial waters, what it means is 12 nautical miles. 12 nautical miles from the last point of landmass towards the water body. So take 12 nautical miles from each point. Each point take 12 nautical miles, and this area is called the territorial waters. And if an assessee spends a day or spends any amount of days in this area of territorial waters, it will be regarded as his stay in India. Say the assessee stays for 140 days in Tamil Nadu and sails on a ship. The ship that he sails on remains in the territorial waters for say 15 days. Then the total number of days that assessee stayed in India as per the Income Tax Act will be 155, 140 plus 15. It will not just be 140 based on the number of days that he stayed on land. It will be 140 plus 15, that is 15 for the number of days the ship spent on territorial waters. Alright, and that will be treated as the assessee's presence in India. Fine. Also, last and final point, date of entry and date of exit is to be included. Say the assessee's flight arrives on 1st August 2020. The flight leaves on 7th August 2020. So while we take the number of days the SSC stays in India, we need to include both 1 and 7. So 1, 2, 3, 4, 5, 6, 7. All the 7 days shall be regarded as days in which he stayed in India. So always include the date of entry and the date of exit while we total the number of days an SSC stays in India. Clear? So yes, with all these points kept in mind, let's head to the detailed study. Section 6.1. Classifying an SSC, an individual SSC, into a resident or non-resident. If an SSC, an individual, satisfies any one of the two basic conditions, so we have two basic conditions, and if the SSC satisfies any one condition, then the SSC shall be treated as a resident. Condition number 1. Stayed in India for 182 days or more in the previous year. So our previous year is 2020-21, right? So if the SSC stays for 182 days or more than or equal to 182 days, then the SSC shall be treated as a resident. Say the SSC does not stay for 182 days. Check whether the SSC stays for 60 days or more. 60 days or more in the previous year and in the preceding 4 previous years. 4 preceding previous years. So for us it's 1920, 1819, 1718 and 1617. For all these 4 years together, the SSC should stay for 365 days or more. Alright, so 60 plus 365. Either 182 just in 2020-21. If not 182, check whether the SSC is staying for 60 days or more in the previous year and 365 days or more during the 4 years immediately preceding the previous year. Understood? So 60 plus 365. So these are the two conditions which need to be checked while determining whether an individual is resident or not. And if an individual satisfies any one, then the individual shall be treated as a resident. Alright. Now for certain categories of SSCs, there is a relaxation. You do not have to check this particular condition. That is a 60 plus 365. You just have to check the condition of 182 days. Let's check who those SSCs are. And before going to that area of exceptions or relaxation, let me just remind you of the important amendments that the Finance Act has brought in. Finance Act of 2020 regarding deemed resident and Indian citizen or person of Indian origin residing outside India who is visiting India. So we'll be having separate study for these two right after the study of residential status based on the normal rules. Okay, so do keep in mind for these two SSCs, we'll determine residential status in a completely different manner, not based on the 6.1 rules or the 6.6 rules. All right. Fine. Rules under section 6.6 is for determining whether it's an ROR or an RNOR. So for both these SSCs, for Indian citizen or person of Indian origin residing outside India, visiting India, and for deemed resident, we'll be determining their residential status purely based on a completely different method. Fine? Right. Now let's check the exceptional category. That is the two categories of SSCs whose residential status shall only be determined based on the first rule of 182 days. So for the following category of SSCs, condition 2 is not applicable. That is 60 plus 365 not applicable. Only 182 applicable. Let's see who they are. Number 1. SSC is an Indian citizen, leaves India by being a crew member of an Indian ship during the previous year. So Indian citizen leaving India by being a crew member of an Indian ship. So crew member, Indian ship, Indian citizen, leaving India. Don't go for 60 plus 365 if you see any of these in your questions. Next, Indian citizen leaving India with work outside, with employment outside. It can be getting a salary job, or it can be his business, or it can be any other thing. He's just getting a job outside. He's going for work outside. So if an SSC is going for work outside, then that SSC's residential status shall be determined purely on the basis of 182 days rule and not 60 plus 365. So for these two categories, that is for two categories of SSCs who are leaving India. One SSC is leaving India by being a crew member of an Indian ship. The other SSC is leaving India by way of employment being received outside India. Alright. So these two SSCs only 182 days. So if they stay for more than or equal to 182 days, then they'll be a resident. If not, non-resident. Clear? Now, going to the amendment as per the Finance Act 2020. This might seem a bit confusing for you guys, but don't worry. Right after the theoretical study that I'll be giving you here, I'll be taking you to a very, very interesting and simple chart. And once you see that chart, I'm pretty sure the clarity of yours regarding this topic will be crystal clear. So yes, amendment as per Finance Act 2020 says, for a certain category of assessees, that is an assessee who is an Indian citizen or a person of Indian origin. You all must be knowing who an Indian citizen is, right? But then this term of person of Indian origin, that is PIO, might be new for you. It's nothing. Simple. An assessee shall be considered as a person of Indian origin if the assessee or his parents or the grandparents, the assessee or parents or grandparents of the assessee, born in undivided India. What is undivided India? That is India pre-independence. So pre-independence, India, the landmass of India, Pakistan and Bangladesh. These three landmasses together was one entity, and that single entity is called undivided India. So the assessee, the parents of the assessee or the grandparents of the assessee were born in undivided India, then that assessee will be called as a person of Indian origin. Alright, fine. So an Indian citizen or a person of Indian origin residing outside India visits India. Alright, so we have an Indian citizen who is residing in the United States or a person of Indian origin who is residing in the United States visiting India. And this particular assessee earns a special total income exceeding 15 lakhs. And by special total income, what I mean is total income which is purely Indian. Say this assessee has a total income of 50 lakhs. So out of 50 lakhs, say 30 lakhs is income that he earns from the United States. Fine. But the other 20 lakhs is purely Indian. He earns 20 lakhs of income from India. That is, his total income from India exceeds 15 lakhs. So the special total income is nothing but the total income excluding income from foreign sources. So if an assessee earns total income excluding foreign income exceeds 15 lakhs, that is, the assessee's Indian income exceeds 15 lakhs, and the assessee is an Indian citizen or person of Indian origin residing outside India visiting India, then for this particular assessee, you will determine the residential status on a special manner. And that special manner is, the assessee has to stay for a period of 120 days or more in the relevant previous year. We previously saw it's 182, right? 182 days. Take off this 182. Replace with 120. So if the assessee stays for 120 days or more and 365 days or more in the 4 preceding previous years. This is for the previous year, and 365 days or more for the 4 preceding previous year, this assessee shall be treated as a resident. Understood? So take the example of Mr. A. Mr. A is a person of Indian origin and he is residing in the United States. He comes to India. He earns around, say, 17 lakhs of income. 17 lakhs of income purely from India. Alright. Now to determine the residential status of Mr. A, we need to check whether Mr. A stays for a period of 120 days or more in the previous year. And on top of that, check whether Mr. A is staying in India for the 4 preceding previous year for more than or equal to 365 days. If both satisfied, Mr. A shall be treated as a resident. Understood? It might seem easy now, but there are chances that you will get confused with this concept once you check few questions. Now, with respect to that confusion, I'll sort it out completely with the help of a simple chart that you'll see at the end of this study. Alright? Or I'll put up a separate video for that chart. Fine? If this video is going too long, I'll put up a separate video for that chart. Yeah. So that's the amendment as per Finance Act 2020. Right. So the first amendment as per the Finance Act 2020 is done. Let's go to the next. That is the amendment with respect to a deemed resident. Now what the Income Tax Act says here is, this section was brought in to catch certain assessees who evade tax, who evade paying tax. Now how do they do it? They do that by structuring the number of days that stay in such a manner that they do not have to pay tax in any country. They shift their place of residence very often, very quickly, in such a manner that they do not pay tax for certain incomes. Now to catch these assessees, the Income Tax Act of India brought in this section of 61A. Let's see what this section is. An assessee shall be treated as a deemed resident if the assessee satisfies all the following conditions. Condition number 1. The assessee should be an Indian citizen. Number 1. Indian citizen. Number 2. The assessee's total income from Indian sources only should exceed 15 lakhs. So Indian citizen, total income from Indian sources alone exceeds 15 lakhs. Also, with respect to this total income, assessee does not pay tax in any country. Assessee does not pay tax in any country. Say an Indian citizen, Mr. A from the US. Mr. A from US. Alright. Having a total income exceeding 15 lakhs. Say the total income of Mr. A purely from India is 17 lakh. Now from the amendment that we just saw previously, we understood that Mr. A shall be treated as an Indian resident in such a scenario if Mr. A's period of stay crosses 120 days. Right, touches or crosses 120 days. But then here Mr. A only stays for 80 days in our country. Only for 80 days. In that scenario, what happens? Mr. A becomes a non-resident, right? Because to be a resident, Mr. A had to satisfy 120 days in the previous year and 365 days in the 4 preceding previous years. He had to satisfy both these conditions, yeah? But he doesn't satisfy anything. He doesn't even satisfy the 120 days. He's only in India for 80 days. So that makes him a non-resident. Now Mr. A does not pay any tax. No tax paid for the 17 lakhs in any other country. He doesn't pay any tax for the 70 lakhs in USA. Now the Income Tax Act started noticing a lot of cases like this, and they brought in this section. They said if a citizen of our country comes to our country, say for any number of days, doesn't matter, but earns an income exceeding 15 lakhs from Indian sources only. In such a scenario, if this particular citizen does not pay tax for this income anywhere else in the world, then we shall treat him as our deemed resident. Mr. A will be treated as India's deemed resident. So conditions are, should be an Indian citizen, total income from India exceeds 15 lakhs and does not pay any tax for this particular income in any other country as well. See, if Mr. A had stayed for 120 days or more, he would have been treated as a resident, right? But here he only stays for 80 days. That makes him a non-resident, yeah? So that's the case here. Understood? So these are the 2 amendments brought in by the Income Tax Act or the Ministry of Finance for the financial year 2021 and onwards. Alright, they might change this for the next year. We'll have to wait and see. But for this particular year and your examinations for 2021, this is 100% applicable. Right? Again, if you have any confusion, don't worry. Do watch my video based on the simple chart that I mentioned. Once you watch that, I'm pretty sure everything will be crystal clear. In case you have any other doubt, please feel free to reach out. Right. So we found out everything with respect to the determination of an assessee being a resident or not. Now let's see how we can find out whether a resident is a resident ROR, that is a resident ordinary resident, or resident but not ordinarily resident. Now for that we have section 6.6. For resident non-resident we had section 6.1. This was for resident and non-resident. For ROR and RNOR we have 6.6. Now again here we have 2 conditions. If a resident assessee, if a resident individual satisfies both conditions. In 6.1 it was just satisfying one condition out of the two. Here satisfies both conditions. If that's the case, a resident shall be treated as an ROR. If he doesn't satisfy both the conditions, then RNOR. Let's see what those two conditions are. Condition number 1. He has been resident in India for at least 2 out of 10 previous years immediately preceding the relevant previous year. So our current previous year is 2020 and 2021. 2020 to 2021. So go to 10 preceding previous years. That is, go up to 2011, 2012. So there are 10 years here. So out of these 10 years, the individual has to be a resident. Has to be a resident for 2 years. And by being resident, what do I mean? Individual satisfies section 6.1. That is, either 182 days or the 60 plus 365 days rule is satisfied by the individual as applicable to him. So he is a resident in India for any 2 years from 2011-12 to 2020-21. Alright, so for the preceding 10 years, starting from 2011-12 to 2019-20, the individual is a resident as per section 6.1. Alright. And the next condition, for 7 preceding years, that is from 2014-15 to 19-20. This is a set of 7 years. For this set of 7 years, you do not have to be a resident or anything. All that you have to do is be physically present in India for 730 days or more. That is for a total of 7 years. That is 7 years immediately preceding our previous year. Be physically present in India. You do not have to satisfy any conditions of section 6.1 like 182 days in a year or 60 in a particular year, 365 days in the 4 year, nothing like that. Just be physically present. Just be physically present in India for 730 days out of 7 preceding previous years. 7 years preceding our previous years. Alright. So 2 conditions. 2 out of 10. Here be a resident. 730 days out of 7. Here just stay. Do not have to become a resident. Just reside. Residing and being a resident are 2 different things. Being a resident means satisfying conditions of section 6.1. Residing means simply staying without satisfying any condition. Now if you satisfy both these conditions, you are an ROR. If you do not satisfy both these additional conditions, you are an RNOR. Clear? Simple? Yes? So 2 conditions for ROR or RNOR. Satisfy them both, you become an ROR. Don't satisfy them both, that is, you only satisfy one or don't satisfy anything, then you become an RNOR. It's that simple. Now again, there is an exception to this particular rule as well. For 2 categories of SSEs, you will always have them as an RNOR regardless of them satisfying 6.6 or not. Let's check who these 2 SSEs are. Number 1, deemed resident, section 6.1a. Number 2, assessee, an Indian citizen or person of Indian origin visiting India in the previous year with total income exceeding rupees 15 lakhs, where period of stay exceeds 120 but less than 182. So who are these assessees? These are assessees as per the Finance Act of 2020. Alright. Now only thing an additional mention here is this. The period of stay should be more than 120. Let's say period of stay is X. Period of stay is more than or equal to 120 but less than 182. This less than 182 is new here. You know why? It's because if the assessee stays for 182 days or more, he becomes a normal resident as per section 6.1. You do not have to go under any other rules. You do not have to go under the Finance Act 2020. If he stays for 182 days or more, you satisfy rule as per section 6.1. Alright. Alright. It's for the assessees who do not satisfy 182 days as per rule section 6.1, the Finance Act brought in this amendment. Yeah. Simple, yes. So these are the exceptions to section 6.6 to determine whether an assessee is ROR or RNOR. So these 2 assessees, deemed resident and the Indian citizen person of Indian origin, shall always be an RNOR. But with respect to the Indian citizen or person of Indian origin, make sure that they do not stay for 182 days or more. If they stay for 182 days or more, what happens? They become a normal resident. If they become a normal resident, 6.6 becomes applicable. They can be an ROR. If 6.6 is satisfied If it is satisfied, they become an ROR. If they do not satisfy 6.6, they become an RNOR. This is only when they stay for more than 182 days, more than or equal to 182 days. Now, in case you're confused, don't worry. I have a chart in a separate video. I leave the link to that video in the description of this particular video. Alright, so you can head to that link and view that summary of the Finance Act 2020 amendment with respect to determination of residential status of an individual. Right? Also, I'll be making chart videos for the whole section of individuals as well, but that's just basic thing. Just that the Finance Act 2020 is a bit misleading or confusing, and for that I would suggest every one of you to watch that particular video. Alright, so with that said, I'm winding up this video. So what all did we learn here? We learned about the basics of both the rules, that is the rule of residential status and the rule of source of income. Yeah, we learned the basics. Then we saw the basis on which we determine the residential status of an individual. Number one, being a resident or non-resident based on two basic conditions. Satisfy just one, you become a resident. Then we saw section 6.6 becoming an ROR and RNOR. In due course of the study, we saw various exceptions and the important amendments brought in by the Income Tax Act from the financial year of 2020-2021. Yeah. So yes, winding up this video and reminding you all to head to the description, click on the link and view my summary chart as well, wherein I've simplified the whole Finance Act 2020 amendment into a single chart. So yes, that's it. Looking forward to seeing you in a different video of mine. Till then, take care and goodbye.